Yeah, good morning, everyone. Yesterday we saw mixed reactions in the US market. If you see S&P 500 was ended in negative, whereas Dow was positive. What we see that the GDP figure which has come in the US was on the positive side and it came in at 2.6% against expectations of 2.3%. More in that, the indications on the inflation side was also positive, which was indicating that the inflation is coming off, which has been taken by the market as positive, and the bond yield corrected yesterday in the US market by almost around 12 basis points on that. But on the other hand, Amazon came up with the numbers which were poor, and the Amazon share was one point of time down by around 16% post market, as the result came after market hours. So now we are seeing some negativeness in the results. Yesterday also we saw some negative results on uh, of Google and also Microsoft, and now Amazon also. So results are showing some negative trend in the US market as well. Today morning in Japan, uh, central bank is likely to keep the interest rate unchanged and likely to further stimulate the economy. Yesterday, European market, ECB increased the interest rate by around 0.75, which indicate that even the US also Fed is likely to increase the interest rate in similar quantum on the meeting on 3rd November. So Asian markets are seeing some negative trend today. Most of the markets are down and are indicating some negative trend in the Asian market. Even the commodities are also seeing some negative trend in today's morning, with uh, iron ore is down by almost around 4.5% and steel is down by around 3% in today's morning in a China market. So sentiment seems negative from the Asian side, whereas US market remain more of a sideway. So we may see some decline in today's market, as yesterday we saw last hour bump up in the market. So we may see some corrections in the morning trade. Now request technical team to take up from here.
Thank you, sir. A very good morning, all of you. So, as we've seen in yesterday's market, we have seen a strong opening at around 17,800 levels, and then towards the end of the day, we have seen a selling pressure in the index, and approximately after 2:45 3 p.m., we have seen a small recovery, which took Nifty again to 17,740 levels. So, well, Nifty is well placed above all its moving averages, and Nifty is currently trading in its upward rising channel. And it is and the thing is, once Nifty crosses 17,800 levels on the closing basis, then only a strong buying will be seen in Nifty. So immediate intraday resistance for Nifty for today is 17,820, followed by 17,900. And if that is also achieved, then 18,000 levels will be tested. But immediate support, like if Nifty again tries to enter the channel, then it will be 17,640 to 17,570. Moving on to Bank Nifty, similar pattern was seen in Bank Nifty as well. A strong opening, then a selling pressure, then a small bounce back. Again, Bank Nifty is also placed above all its moving averages. Bank Nifty is currently forming an inside candle. And immediate resistance for today in Bank Nifty is currently placed at 41,500. Once it closes above that, it might reach to 41,770 to 42,000 level, which will be a strong psychological resistance level. Whereas immediate support for Bank Nifty is currently placed at 41,000, followed by 40,750. Moving on to Nifty Financial Services, it is also forming an inside candle, which was same as Bank Nifty. But once Nifty Financial Services crosses 18,500 levels on the closing basis, then we'll see a strong rally in this to 18,590 to 18,650 levels. Whereas if it breaks the low of yesterday, then it might again test 18,330 to 18,260 levels. Now moving on to the stock, LIC Housing Finance is currently looking great at the current levels. It has formed a symmetrical triangle pattern on this daily chart, and it is good above 425. It will be a conditional buy call. Once it crosses 425, you should take a buy position in LIC Housing Finance for a target of 447 by keeping a strict stop loss of 414. That's all from my side. I request derivative guys to take the call forward.
Yeah, thank you, Ash. Good morning, everyone. So, as per derivatives data front, we have witnessed that in yesterday's trading session, Nifty almost remained flat and the expiry almost came at a flattish note where the Nifty opened on yesterday's trading session. If we talk about today's trading session, you are seeing that the SGX is likely to open around 17,840 points, so almost around 100 points. We can see the Nifty is likely to open on a upper note. While on the monthly basis or weekly basis, if you look at the weekly basis OI position, the highest put right positions got added up in yesterday trading session was at 17,700 for the next weekly expiry. So 17,700 will act as an important supportive zone. If it goes below 17,700 level, directly the next support would be 17,500 level. While on the upper end, we are seeing that 17,700 to 18,000 strike, there has been heavy call writer positions getting added up. So, if in today's trading session, we are seeing that Nifty is likely to open around 17,840 level. So, for next 1 to 1.5 hour, if Nifty gets stable above 17,800 level, then we might expect some buying momentum to get continued in the market towards 17,900 to 950 level on the upper hand. Well, the India VIX yesterday closed at 16.60 level, so this is a positive scenario. And the another positive data is FI. FI yesterday gave close in a positive zone, almost around 2,800 crore FI buying was been witnessed in the market. But if you look at the overall OI position, it seems to be quite a profit booking on the upper end towards 17,800 to 900 level. So if it Nifty gets stable above 17,800 level till 10 p.m., then only we might suggest to create fresh new long positions, or else whomsoever holding the long position should keep the stop loss at 17,700 level. While as per stock and sector specific, we expect banking and realty sector to show some positive strength in today's trading session. Also, the selective stock from the banking would be Bank of Baroda, Can Bank, SBI. Another counter which two counter which seems to be positive. First one would be Granules. We have recommended in yesterday's trading session Granules. Granules is continuously getting added up the OI positions near 370 to 360 strike. So we expect Granules to show some buying momentum which might stretch toward 380, 390 level in coming trading session. Another counter would be L&T Finance. We are seeing that the L&T Finance, the strong base has been created around 77 to 75 levels. And on the upper end, 82 is acting as an important resistance zone. Once 82 stock gives closing above 82 level, then we might expect some buying, healthy buying momentum towards 88 to 90 levels in coming trading session. So these two counter looks positive for coming trading session. That's it from the derivative front. Thank you.
Good morning. On RBL Bank, although result was disappointing with slippages remaining elevated, there is some positive news which can lead to further re-rating. As per media reports, RBI is likely to withdraw its official Mr. Yogesh Dayal from the board of RBL Bank ahead of the expiry of his term after a forensic audit did not find any red flags regarding the bank's non-performing assets. Dayal, who was earlier RBI's chief general manager, was appointed as additional director on RBL's board in December 2021 for a period of 2 years. And it was a prudent action taken by RBI at that time following concerns about rise in NPAs, and also its earlier MD Vishwavir Ahuja was let go of during that time. So if this news were to come true, then it will be taken very positively for RBL Bank. Even yesterday, I think market already, some of it was factored by the markets. PNB Housing Finance result is above expectation on the bank of improved NIMs. AUM growth has also started growing sequentially, and although on a YOY basis, it continued to decline by 6%. Asset quality also improved. And more important thing over here is to note that Canfin's MD, Mr. Girish Kousgi, has just recently joined PNB Housing as MD and CEO. And the key vision over here is to improve the asset quality and grow the company profitably while maintaining high liquidity. Management also highlighted that the company is likely to raise funds of 2,500 crore via rights issue by the end of December. We believe that fundraising plan along with strengthening of the management team warrants a re-rating with gradual improvement in return ratios. So we are positive on PNB Housing Finance. SBI Card's result was below estimate. Asset quality was stable. However, credit cost is slightly above estimates, which led to miss on earnings where PAT declined by 16% sequentially. And this kind of decline also led to decline in ROA and ROE also. Competitive intensity is visible in continuing market share loss, which declined to 18% from last year's 19%. And from the time of IPO, like almost 2.5 years back when the IPO came, that time the market share was 20%. So a considerable loss of market share, and even there is pressure on NIM because of decline in revolver mix, which again at the time of IPO was almost 36-37%, but today the revolver mix has declined to 24%. So that has put a tremendous pressure on net interest margins. And there is no sign of any revival as such as of now. So outlook for near term is neutral. However, looking at the overall loan growth and the tailwind in the credit card industry, we are positive from the long term point of view. Tamil Nadu Mercantile Bank result has improved. Asset quality was good. Slippage ratio came at 1% against June quarter's 1.5%. Stock is trading cheap at 1.3 times the trailing price to adjusted book for 2% ROA that it delivered this quarter. And so overall, it looks a pretty good bank to invest in. But the only risk is that almost 37% of the shares of the bank are held by RBI in an escrow account due to illegal transfers that happened many years back. In case RBI allows these shares to sell, these shareholders to sell their shares, then that could put some pressure on the stock. This is the only risk that we see. Otherwise, performance of the bank is very good. And from a long-term perspective, we think there is value in the stock. Aditya Birla Sun Life asset management result was okay. This is the only AMC which has consistently underperformed and market share has been consistently losing. Revenue, EBITDA and AUM all three were flattish quarter on quarter. In comparison, if we see for other mutual funds like HDFC and UTI, they both grew by 3.5% and 4% respectively on a sequential basis. So market share continues to company continues to lose market share, and we suggest to avoid the stock. If anyone is holding, also one should exit and probably move to any other listed AMC. All three of them are doing decent job. Thank you.
Good morning. Latent View has posted its result, and the company has posted improved set of numbers majorly on the revenue front, with revenue growing by 39% year on year and 10.4% QOQ to 132 crores. Although the margins remained in the similar level as compared to QOQ and year on year. However, higher sales has led to a higher profit to the company. Stock is trading at a PE of 59.4 times TTM EPS. Thank you.
Good morning. Indian Metal and Ferro Alloys reported declining set of numbers both on revenue and EBITDA front. Revenue came in at 673 crores versus 743 crores sequentially, whereas EBITDA came at 64 crores versus 228 crores sequentially. Apart from this, the company has also declared an interim dividend of ₹5 per share for FY23. Record date for the same is set to 2nd November. Thank you.
Good morning. Anupam Rasayan India Limited has reported result yesterday in line with the expectations. The revenue reported at rupees 386 crore, which grew by 55.2% YOY and 12.4% sequentially. EBITDA margin came at 27%, which is in line with the company's guidance and analyst expectations. The margins were reported lower sequentially by 300 basis points. The stock is trading at PE of 28.3 times to FY24 EPS, and we are positive on the stock on account of company's strong business growth and sustained margin profile. The Balaji Mines Limited reported result which was below expectations, as the top line performance was below expectations, where revenue stood at 628 crore with 19.4% YOY growth against the expectation of rupees 739 crore. EBITDA margin was largely in line with the expectations of 27.1%, which stood at 27.6%. The stock is trading at a PE of 17.7 times to FY24 EPS. Currently, we have a neutral view on the stock for the near term. The Tata Chemicals Limited result was broadly in line with the expectations. Revenue came at 4,239 crore, which grew by 40% YOY versus the expectation of 4,220 crore. It was observed that soda ash demand was robust across all application segments, and it is expected that it should remain firm in the near term. Also, the soda ash prices continue to remain robust across geographies, which improved the realizations in foreign markets. The EBITDA margin came at 21.7% versus the expectation of 22.3%. The operating performance was largely improved because of the improved realizations and efficient cost management. The subsidiary of Tata Chemicals for the soda ash has entered into a multi-year logistics services and membership withdrawal agreement with American Natural Soda Ash Corporation. This will benefit to build a world-class integrated customer-centric organizations from its locations in India and across foreign locations. The stock is trading at PE of 15.3 times to FY24 EPS, and we are long-term positive on the stock. Thank you.
Yeah, some results for Monday. So L&T is likely to report numbers, and numbers are likely to show some improving trends wherein revenue is likely to increase by around 12% year-on-year, and profit is also likely to show positive trend on year-on-year basis. Motherson Sumi Wire is also likely to report number, and here again numbers are likely to show some positive trend quarter-on-quarter. As last year the company was not demerged, so the company got demerged in between the year. So quarter-on-quarter, the EBITDA margin is likely to improve by 100 basis points, and revenue is likely to increase by around 7-8%. So Motherson Sumi Wire result is also likely to show improvement. Supreme Industry results is likely to show some weakness because of the decline in the PVC prices. We had seen that the Phenolics industry results came very much negative with large inventory loss, and which has resulted into negative profitability for Phenolics industries. We will see similar trend in Supreme Industry result also in this quarter, but this will be one of quarter, and thereafter since the PVC prices are near to its bottom, so from there the things can start improving. Tata Steel is also likely to report number, and here the numbers are likely to show some declining trend again because of the decline in the because of the decline in the realization. We had seen that the JSW Steel has reported declining trend, which will also be reflected in the Tata Steel as well. EBITDA per ton on consolidated basis is likely to see decline of almost over 1,000 to 1,200 10,000 to 10,000, 12,000 rupees. So substantial decline will be seen in this quarter for Tata Steel result as well. So then Bharti Airtel is likely to report numbers, and here again numbers are likely to show some improvement, with margins are likely to further show improvement quarter on quarter. The margins are likely to improve by almost around 60 basis points quarter on quarter, and revenue is also likely to show some improvement quarter on quarter of around 3-4%. So overall, Bharti Airtel result will also show some improvement in this quarter. I'll request commodity team to take up from here.
Yeah, thank you, sir. Good morning, everyone. Today, we are likely to see some profit-taking correction in commodities. Talking about gold, 50,850, 900 seems to be a bit of a resistance area, and we might see prices correcting 50,600, 550 on lower end. So traders can opt for selling at 50,850 with a stop loss of 51,000, and again can interlong at 50,600, 550 levels, maintaining a stop loss below 50,350. So seems to be a range bound movement, and one can trade both sides. Silver also, one can expect prices to test 58,000, whereby buying can be initiated with a stop loss of 57,500, and for the upside 58,500 to 58,850 should be the upward targets. Crude, we expect some profit taking, so one can initiate a sell around 73.10, 73.20. We may see prices testing 7,200. However, 7,200 also looks attractive. One can initiate a buy around 7,200 with a stop loss of 71.30. Whereas in metals, copper 658 seems to be a support area. Prices have opened gap down, so a pullback is expected till 662, 664 levels. Then again, we might witness a selling pressure. So overall, a pullback till 64, and then again one can initiate a sell with a stop loss of 668. Zinc 267 seems to be a good support area. So if maintains sustains above 267, one can initiate a buy for a pullback 270, 271, and natural gas, we might see prices correcting. So selling on rises recommended around 490 to 93 levels with a stop loss of 508. Prices can test 465 levels on downside. Right. That's it from me. I'll ask Ria to take over from here.
Yes, sir. So, hello everyone. On the currency side, the US GDP numbers grew at 2.6% quarter and quarter. This has come after the US economy saw a 2-quarter decline. However, if you look at the underlying numbers, the growth, the final sales to private domestic buyer growth has slowed from 0.5% to 0.1%, indicating that there is an erosion of demand that is happening. Even in the consumer spending, the growth has slowed from 2% to 1.4%. Thus, this GDP number should be taken with a grain of salt. The dollar index reversed from the lows of 109.53 to trade at 110.41 after the GDP numbers released. The ECB raised rate by 0.7%, most since 2009, taking the rate to 1.5%. they have also indicated that a further rate hike might be in the picture. On the quantitative tightening side, the TLTROs, which they had initiated before the pandemic in order to support the economy, the window for they have given a window to repay these loans at 0 to negative rate until November 23. After that, they'll start to levy the increased interest rate. So this in terms indirectly, they have started QT as well on the 3.3 trillion euro package that they had introduced during the pandemic. After this, the euro fell, and we are seeing the same sentiment getting translated into the euro INR as well. In today morning, Bank of Japan also came out with its policy rate, maintaining the policy rate at an ultra low with continuing it at negative 0.1%. There is a little volatile momentum that we can see after that into the USD JPY. For the USD INR, there is it has uh, seen an appreciation side. However, looking at the factors such as there could be a high risk of high oil prices, taking into consideration the recent OPEC statement that have come, which they have said that they'll be decreasing their production or going for a production cut in order to meet the diminishing demand. Also, there is a high trade deficit, and the capital flow remains to be slow. Thus, I think 80 to 40, 80 to 30 should is the level. As around that level, a lot of hedging position will start happening. In today's intraday session, it has opened on a weaker note at around 82.65. It could test 82.41 in today's session. A sideways consolidation momentum is expected into the USD INR. For the other pairs, for Euro INR, look for a breakdown of 82.38 to go short into the pair. For the target of 82. You can maintain a stop loss at 82.60. For the GBP INR also, the sentiment seems to be getting a little bit relaxed. Look for a breakdown of 95.38. The budget, which was supposed to happen on 31st October, has been pushed to 14 November, and thus the guidelines for the whole US economy, monetary and fiscal policy still remains quite hazy, and thus look for a breakdown of 95.38 to go short into the GBP INR for the target of 95.19, 94.74 with an SL at 95.85. For the JPY INR, the momentum will remain sideways within the level of 56.76 and 56.50. That's all on the currency front. Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.